Thank you for joining the third annual Spring Financial Aid webinar series. This series is brought to you by the Northern California College Promise Coalition, or NCCPC for short. NCCPC is a collective impact coalition with over 40 members serving over 150,000 students across 12 Northern California counties. Our geographic footprint includes the 9 Bay Area counties, Sacramento, San Joaquin, and Tulare counties. We bring over 200 leaders together through committees, convenings, and working groups around 4 key pillars. Number 1, advancing public policy. Number 2, building campus partnerships. Number 3, scaling workforce pipelines. And number 4, convening communities of practice. Our members are locally and nationally recognized college access and success programs, advocacy organizations, college and neighborhood promise programs, K-12 and charter school districts, education technology nonprofits, individual advocates, and cities and mayors. We believe that working together, we can impact systemic change on behalf of all of the students we serve and beyond.
I am so pleased to introduce today's session and our speaker, Dora Breyer. Dora is a local professional passionate about advancing educational and socioeconomic equity. As Community Relations Manager at Excite Credit Union, she leads the organization's philanthropic efforts, including financial literacy, children's savings accounts, nonprofit and school partnerships. She serves on the board for the Center for Excellence in Nonprofits and volunteers with Child Advocates of Silicon Valley. She previously advised first-generation students at nonprofits such as San Jose Cal, SAOP, and Breakthrough Silicon Valley, and now provides support to families around financial access for college and career preparation. I'll drop the link to the Padlet that we'll be using today to post questions for Dora. Post questions at any time, and this is where we'll go to for questions when we get to the Q&A portion of our program. You can heart a question you already see to upvote that question for the speakers. Now, without further ado, I'm excited to introduce to you Dora Breyer.
Hi, everyone, and thank you, Mayor and team, for having me. It's a pleasure to be able to take a step in hopefully making personal finances less of a taboo topic and something that we all feel a little bit more comfortable talking about amongst our own peers and to the students we work with. As Beth mentioned, I previously have worked with programs like San Jose Cal, BAOP, Breakthrough Silicon Valley. So that's definitely a passion area of mine. In addition to serving foster youth in particular, I've volunteered as a CASA and with child advocates for over 7 years. And so I made a pivot into Excite Credit Union, clearly do not have a financial background, but do this work in supporting the community and providing educational information in order to make sure that we're supporting our students, not only with, let's say, scholarship support, but with information about how to manage those funds. I myself am a first generation. I went to UC Santa Cruz. If there are any other banana slugs, please make yourself, yay. Okay, besides Mayor, any other banana slugs, you can make yourself visible in the chat. And my parents are from Mexico, so I certainly did not have this information when I was growing up. And we want to make it more accessible and available to folks. So I will go through a few different things today, but as you have any specific questions, please feel free to mark them on that tablet or in the chat so that we can get to them. I also shared my LinkedIn and I'll share my contact information so you can reach out at any time with any questions, however we can support you. Class of 2021, yay, I see that in the chat. Thank you. We're close enough that there's always usually a banana slug in the room. So we'll be talking about the differences between banks and credit unions, some alternative services, credit, especially because that's a huge question that comes up often amongst our youth, both high school students and college age students or transitional age youth, and a little bit about saving. Thank you all again for being here. So I'll run through here, but I do like to preface by also saying that this is a non-judgmental and confidential space. So you are all welcome to share any questions that you have at all. And there's absolutely no judgment here because we're all in very different spaces, both personally, if you're coming to learn, and in the audience that we work with. So all questions we're open to all questions here. All right, so I'd like to start with the differences between banks and credit unions. And first, the reason why I touch on this is because we want the folks we work with, I want the folks we work with in the community, I would love for them to feel informed and empowered to make a choice about where they bank, and to see their financial institution as a resource for them. For myself, I was 18 going off to college, first one in my family to do so here in the US. And I just saw the local bank and thought, okay, I think I'm pretty sure it's something I got to do. I'll do an account there. And I had no idea that there was even an option to shop around, so to speak, or to consider other options. No one ever sat me down and said, here's what's available, here are the differences. And so in light of that, I'd love to help ensure that our community feels a sense of choice around that, and that they can make that choice at any age, regardless of their age. You can always move or have multiple accounts, etc. So when it comes to banks and credit unions, one of the biggest differences is that banks are for-profit companies, whereas credit unions are not for profit. All credit unions are either 501c1 or C14, based on whether they are federally or state chartered. And you'll see some examples here. Of course, these are some examples of banks, and I think Mayor will be able to share this as a PDF afterwards. I'm happy to share it. And when you have it as a PDF, you'll be able to click on all of these. I'm sorry, not the bank ones. You'll be able to click on the credit union symbols in order to go to their page about how to become a membership, as a way to help you learn more and go directly to their websites. Banks are shareholder owned, whereas credit unions are member owned. So what this means is that we do not have shareholders. Our shareholders are technically our members, because that's the original cooperative model where everyone involved has a stake in the organization. So we still have that type of model in place. And often thinking about becoming a member is a little bit intimidating, because you might feel like, well, do I have to do something extra in order to have my accounts here? And you just have to apply like normal, only that it can be a little bit confusing, where you might see something like the police credit union and think, do I qualify for that? There are still some credit unions that have limited membership. Navy Federal, for example, is actually for all military personnel and their families. County Federal of Santa Clara County is still for county employees. So that can limit folks, because once you hear that, you think, okay, I don't know where I qualify, or I don't know where I could be a member. But know that some are much more open, like Golden One is open to anyone who lives in California. At Excite Credit Union, where I work, we are open to anyone who, as we say, lives, works, worships, or studies in Santa Clara and surrounding counties. So a lot of credit unions, although they were born of a certain industry or even a specific company, are now open to the general public. Both banks and credit unions are insured. So you might see stickers, and now if you didn't know what it means, you'll see like FDIC insured. That's a Federal Deposit Insurance Corporation. You don't need to remember that term, but just important to know that they're insured, both are insured by the government in case of any challenges that might come up. So your money remains your money. And as a not-for-profit organization, credit unions, although we do make a profit, also reinvest into the community. One way we do that is by having no or low maintenance fees on your general accounts. At Excite Credit Union, for example, our individual checking and savings accounts do not have any monthly fees associated with them. And so for folks, and a lot of whom I work with, who are in a challenging position, they're in transition housing wise, or food insecure, Maybe one of the adults in the family has lost their jobs. So it's really critical to have differences like this. I've had people say, I try to start saving, I put $250 in my savings account, but they're taking $5 out every month. So it's important to be aware of the requirements that make it so that we're not charged those monthly fees at a bank, or to understand at a credit union where you don't have those fees, to have an account there where you can avoid $5, $10, $15 fees. And again, for many of us, that may not be an issue, but similarly for a lot of us, that can make a huge difference in how much we're able to maintain and being able to pay our bills, etc. So again, that's why I share this. So we have that option, depending on for yourself or the families you work with, what their situation is, these types of differences can make a huge difference in the long run for them. So at Excite Credit Union here are the counties that we serve. We also happen to be in North Carolina because that's where our original corporate headquarters had moved to when we are associated with the General Electric Nuclear Division. And we do specifically aim to serve low to moderate income households. We have these 3 designations, as you see below. We're a community development financial institution. We are accredited low income credit union. And we also have the Juntos Avanzamos designation of the Inclusive Network. That means that we support the Hispanic community and other immigrants in particular. We also support children in foster youth. So for example, you may often see the requirement that youth need to have an adult co-sign with them in order to have an account before they're age 18. And in our case, with foster youth in mind, we do have youth accounts available without having an adult required to co-sign with them. We also, something unique, provide ITIN lending. So as you know, folks who may say, I cannot have an account, or I think that I can't have a credit card or a loan because I use an ITIN instead of a social security number, please do send them our way. You can have them contact me directly. And I am someone in community relations who gets to talk to the community about those types of barriers in order to try to overcome them and see if we can get them set up with an account. So all the same services that we provide for folks with a social security number on the same conditions, we provide for ITIN users. We'll unfortunately often see folks, for example, who say, well, because I have an ITIN, not a social, my home loan, my interest on my mortgage is higher. And we will work to change that and actually refinance for folks in those situations. So again, ways to make financial services more accessible is what our goal is. And it's through partners like yourselves who will help us reach the populations who need that support the most. And credit unions, also to clarify one thing, people often say, well, I don't see one near me, or of course, we're not on every other corner like big banks may be, but we do have a network called the Co-op Network, which is about shared branching. So I could have an account at Mary West Credit Union and come into a branch at Excite and use it like my own, because otherwise it'd be hard to be competitive with banks that are almost on every other corner, it seems. And so this is a way to make the credit unions more accessible to our members, is by sharing. Usually at minimum, you can use the ATMs outside, but you can always look online to see what ATMs are available to you, including the ones that are inside 7-Elevens and other stores. Financial institutions, as we call them, are these banks and credit unions, and they offer the same stuff. So I tend to get questions, folks won't necessarily directly ask, but I get the hint that they're thinking credit unions are somewhat behind banks in terms of what they can offer in the technology. We do have Zelle, we do have electronic funds transfers, we do have everything that banks have at credit unions, including all these that you see here, all these services, including even auto insurance, even IRAs or retirement accounts and other retirement plans. So now I'm going to jump into a little bit about different accounts, something that you all on this call may be familiar with, but as a way to relay the information to those who you work with. Just yesterday, actually, I was tabling among the community and got that question from someone who's recently arrived from Mexico. What is a checking account? And so I like to share that it is a safe place at a bank or credit union to have your funds. And in order to avoid putting it under the mattress or in the closet or in the sock drawer. And I say that because folks still share that that is how they manage their money. And it's not to say that there's a right or wrong way, but to help, again, make sure that people are informed about what their options are. So checking account is where we can use direct deposit, ideally, which is also a safe option to get money directly from your employer electronically transferred into a checking account. And then use a debit card, which serves almost like cash because it debits automatically from your checking account. It allows us to use online and mobile banking, both at credit unions and at banks. And of course, all our transactions are protected. So should someone steal our debit card or steal the information, we're very likely to get those funds back by reporting it to our bank or credit union. It's also important to know, while it may sound scary, that our activity in checking and savings accounts is recorded. There's a system behind the scenes, and you don't even have to remember the name, but it's Check Systems. And there's a typo there, but it's Check Systems. Similar to how the credit agencies, the 3 credit agencies, monitor our credit activity with our loans and credit cards, Check Systems behind the scenes records our activity with our checking and savings accounts. And for many folks I work with, that may sound intimidating or scary, but it actually can work in our benefit. So I like to think of it as working in our benefit to demonstrate our responsibility, our responsible use of funds, so that we may be, with a relationship to our credit union and bank, possibly even more likely to get a credit card, a regular credit card versus a secured card, or to get that loan. So I really do like to encourage people to consider their relationship to their bank or credit union as just that, a resource and a relationship that they're developing over time. And thank you, Mayor, for the reminder to use the Padlet for any questions. And now a lot of folks, and I'll talk briefly about prepaid cards as an alternative service, but I'm tending to see a lot of younger folks using prepaid cards. And what I recommend is to still consider, even if we use those, to still consider a savings account, because it will make it more likely that we're setting money aside and that we're building that habit of saving for emergencies in the future. Most Americans do not have even $1,000 in their savings account, much less enough to cover 3 to 6 months worth of expenses should someone in the household lose their job or another unexpected event take place. So we strongly recommend making a goal of saving at least $1,000. Let's say your tire is flat on your car, or something else happens with your car, you have a medical issue to attend to, or a medical bill that comes up. It's much easier to be able to address that right away instead of taking out a loan or using a credit card and paying interest on that, especially if we're just starting out and that interest may be higher. So savings account really makes it more feasible to both physically and also mentally think about and take the action of setting money aside for the future. And these are types of savings accounts. We do host financial literacy sessions with our community. So if you're interested to share more information about these services with the folks that you work with, please feel free to reach out. I'm just, for the sake of time, going to continue through this one, but know that there's other options aside from a traditional savings account between what I'd like to think of as short-term and then medium-term plan for savings. And these are some questions to consider when opening accounts. What is the opening deposit amount? What fees are associated with it? Again, generally speaking, at credit unions, you don't have monthly fees for your checking or savings account. And how can I avoid those fees? One example of a common question is, should I get a student account in order to avoid those fees? We actually do not have student-specific accounts, or say college students accounts, because we don't have the fees to begin with. So a general, what we call Go Checking, for us it's a Go Checking or Go Savings account, will serve just the same across the board for everyone. One thing to be wary of, let's say you have college students who have a bank and they have that college student account, so they're avoiding fees right now. It's just important to be aware of when those fees will start and when and how they can avoid those fees in the future. Because again, those small amounts of, even if it's $5 a month that they're being charged on their accounts, really do add up over time. And we want to avoid that, especially if we're in a challenging situation. I also like to share the differences between a debit and a credit card. Debit being what you get when you open a checking account, and that automatically takes money out of your checking account. And a credit card being borrowed money that someone must qualify for and apply to. Now, generally speaking, so we talked about checking and savings accounts, and generally speaking, I recommend everyone across the board know what their credit report looks like and know what their credit score is. You can even do this before turning 18. Not that you can have a credit card, but there is unfortunately identity theft, and it can happen even for youth who are under 18, who people will take advantage of that because they don't have any credit history. And so they might have a clean slate to start with. And that's why it's important for everyone at any age to know how to check their credit report and their credit score. Those are two separate things that you have to pull separately. You would think, I would think at least, that a credit score would be on the credit report, and it's not. So the way I think of it is the credit report is like a history. It's a physical paper. It's a history of all the borrowed money that you've ever had. And the score is a summary of that. So I don't necessarily have to read through that line by line. I just get a number that indicates to me how you've done in borrowing money and repaying it back. This is one website that you can use to access those 3 credit bureaus. The main ones are Equifax, Experian, and TransUnion. And you can pull your credit report and your credit score once per year with each of these. So that means 3 times per year for free. So that's a little trick there. That means that we don't have to pay for any services in order to monitor our credit. That's basically a free way to monitor your credit score, both for yourself and for the families you serve. And so in addition to having a checking and savings account, recommend doing that, calculating your income and expenses, and creating a budget, which we'll talk about briefly today, for overall financial wellness. And here are alternative financial services that we like to compare to banks and credit unions, so that folks also know what to be wary of. And different populations may be more inclined depending on where they're at. You'll see different populations in, let's say, Cupertino versus East San Jose. We'll see more or less of these types of services. And that has its long history, which we won't dive into today, but we don't shy away from that conversation and from stating that we're trying to change the type of access that we have, the services that we're accessing, in order to save money in the long run. The average adult who uses alternative financial services over their lifetime will spend about 5% of their income, or an average of about $40,000 on fees alone, just for the fees of the financial services. So again, something to be mindful of and to inform our young community about, for not just for themselves, but perhaps for the adults in their lives or their neighbors. And so I'll briefly share what those are. In this case, we're talking about things like check cashiers. And I think I have, oops, I just gave you the answer to that. I have another image to share that, but those are places even like Walmart where you can go and take your physical check and have it turned into cash. And folks often will use that resource because they think, okay, there's no hidden fees. I don't have to share my information. I don't have to have an account. I can be almost invisible, so to speak. I can remain more confidential, and I like that, and I want to stay that way and just pay something to take my cash out. But again, not always safe and secure, especially in this climate where I hate to say fires and earthquakes are a very real threat. And so we can't rely on keeping cash under the mattress as a safe space to do that. And that's why I welcome folks to consider a checking and savings account. And check cashiers do cost anywhere between 2.5% of the check and up, or just a flat rate of $7 or $8 per check. And that's where folks will essentially lose money right away on their hard-earned check. Payday lenders, imagine that I get paid in 2 weeks, but need the money now. So the amount of the check that I'll get paid by my employer, I request a loan in and I get that payment ahead of time. But these typically come with high interest rates and fees. And alternative services are not financial institutions, even though they provide financial services. They're not institutions like banks or credit unions that are regulated. So oftentimes you might hear folks say, well, if I apply for a loan, it's going to take long. What if I don't get approved? At credit unions in particular, we try to inform people of why they were not approved. If we can't approve them for $5,000, but we can do half of that, we will. But we'll support in trying to help people figure out how to raise their credit score so that they can apply. But keep in mind, what I tell folks, as much as that can be challenging, it is ultimately for the consumer's protection, so that they get something that they can actually pay back, that's actually reasonable for them to pay back, and that's not taking advantage of them. Car dealerships, also important to be aware of deceptive tactics and elevated prices, along with high interest rates. So anytime you see, we don't check your credit score, don't worry if your credit score is low. That's a place to be wary of. And so I have this question for you all. What do you think is a typical 2-week payday loan interest rate? You can put it in the chat or you're welcome to come off mute. All guesses are welcome. What is a typical 2-week payday loan interest rate? I see 20%. Thank you. Any other guesses? Okay, see in the chat, 70%, 35%, it's higher than that. At 28%. I often get that at the 20s and 30s. So when we're talking about a credit card, 20 to 30% is high. For a credit card, 20 to 30% is high, but at a bank or credit union, you will typically not see rates any higher than that for any type of loan. When we're talking about a car loan or home loan, then it's much higher in the 5 to 10%. Someone said 40%, so 70% is the closest. And let me give you the answer here. Again, this is the payday loan, or what some folks also call a predatory loan, which are illegal in some states, but not in California, at least not yet. We're talking 300 to 500% interest. So oftentimes, and I do hear of people, even if they didn't experience it themselves, people in these workshops who know of someone who has experienced it. It basically turns into a debt cycle, and it's very hard to pay down these loans because you're consistently paying fees, and you end up paying about 3 times as much as you got in the loan itself. So that's why we want to be very wary of this. I have had a mom, once I was at the Mexican Heritage Plaza, who didn't have the information at the time, but she ended up crying. She was crying, saying, my son took out a loan for his schooling, and what was originally $5,000 is now $15,000, and I don't know what happened. And I explained to her, very likely could have been one of these types of predatory loans where the interest rate is extremely high. And it's hard to know what you're signing up for unless you read everything in the fine print. Some of the language of like rent to own, for example, can say flexible lease agreement. And while that may sound good, it really means that we don't know the total that we're going to pay and in how much time. So even rent to own opportunities, while they may seem like we're paying in increments and seem like a positive, can take advantage of us in the long run and make us actually pay more. Pawn shops are another example where there's a high interest rate on those. And we do see these in San Jose. I know, for example, there's Ace Cash Advance, I think it's called, in Cash One, right off the Capitol Expressway. So important for our community to be aware of these and the differences. And here's an example of one where if it were me and I see, okay, my $2,000 check, I'm going to pay 2.5% to cash this. That's not that bad. But then I calculated out and realized that that's actually $50 of my check just to turn it into cash. And as you can see here with the arrow, it actually tells you these are not insured by the federal government or any other entity. Here's an example what it looks like at Walmart for a one-time fee, $6. This is an older image, so I imagine it costs more now. Now, another thing to be wary of is even though something is not a formal scam or is not to the point of being illegal, there are places where we may be taking advantage of for our money that we need to be wary of. So I generally say anything that's going to cost you something, you'll want to double check. So even like there's apps, right, for credit monitoring. Not that that's a bad thing, and that could totally be a useful tool. There's agencies that help us monitor our credit and improve it. But especially when we're in a bind and in a difficult financial situation, my recommendation is to always look for nonprofit resources. We're connected to one called Balance. You'll see the information at the end of this slideshow, and you're welcome to utilize them for yourself and your people you serve just by saying, I'm with Excite Credit Union, and it'll be free to you to use their one-on-one financial coaches. So there's resources, like, as you all know, if you're in the education space, there's Cash for College workshops, right? There's scholarships that we apply to. We don't need to pay anyone to find scholarships for us. That's essentially a scam. Even though they might find scholarships for us, we don't want to be paying for something when we can have it as a free resource in our community. If you all remember, we had FAFSA.com at one point where they were charging folks to complete the real FAFSA. And then I give the example, although they may seem funny, of Tinder swindler, because so many of us may have folks who are connected to online who we don't actually know, but who are observing our habits, including our spending habits. So it's really important for youth to have them be aware of that. And so often nowadays we see more what people are calling romance scams. I forget the exact term. But it happens very often for the elderly, but across all ages, where someone might befriend us. It may feel like an online dating scenario, and the next thing you know, they're asking for money. So the way I see it is we're all susceptible to these, but also free trials and promotions, what it's going to charge us afterwards. Is it really worth it? Knowing how to cancel it and deciding if it's really worth the time of canceling something ahead of time before they start charging us, etc. So there's a lot of different things to be wary of. Unfortunately, we have our own presentation on scams and fraud that's separate. This is just a brief glance at it, and you can see here some of those examples. We've all gotten those calls about your extended warranty, but the IRS is after us. And I'll tell folks, ain't nobody got no time to be calling us. Very likely a scam. Usually when it's something serious, we'll receive something in the mail from it. But always double check these things, and never, ever, ever click on any links that we're not familiar with. So as you can see here, this one's relatively simple to spot because you see where the red box is. Even though the logo looks right, it's a wacky email address. So I always tell people, do not click on links. Instead, go to the actual website or log into your account on a separate browser or through your app, rather than use the phone or email or links that are being sent to you and what might be a scam. And it happens super, super often. I mean, we're getting these, there's something like millions, I'm forgetting the number, but there's millions of scam efforts that go out every single day. These are some prevention strategies, including checking your mailbox every day and using long passwords. I also recommend to parents, and parents have shared that they do this, they don't share their their children's social security number or ITINs with them unless they know it's something secure. So youth will tend to not know what those numbers are and tend to refer to their parent or guardian when they need it. And that way their parent or guardian can double check what they're using it for. Now we'll jump into credit real briefly. Credit is borrowed money. And the way that I would love for us to see it, a credit card, for example, is not as extra money, but as a way to demonstrate to our lender that we can use money responsibly. And that's going to help us to maximize our financial capacity in the future. So I'll ask you this question. You can put it in the chat. What makes up a credit score? If, for example, let's say you had $100 and you have 3 people you can lend to, a friend, a cousin, or a coworker. And let's just say I gave you this 100, because the whole thing about lending that to family members, that's a whole nother question. Not going to dive into that, whole nother issue. But let's just say I give you $100 and you can choose to lend it to someone. What are you going to consider before you decide who you're going to lend it to? What factors do you consider in order to decide who you're going to lend that $100 to? Go ahead and put it in the chat. I see why they need it. Thank you. Yep. So people will often say, are they going on a shopping spree, or is it for groceries? Is it for essentials? The ability to pay back, their income. People often also say their debt. So their income to debt ratio, how much they're asking for, right? In this case, it's 100, but how much are they asking for? Why do they need it? Will they be able to pay all that back? Anything else? So ultimately, what people say, how many other people are asking you and how many people they've asked, right? Are they also trying to take out multiple other loans elsewhere? Almost every single time I ask this question, people will straightforwardly say, trust. Can I trust them? What level of confidence do I have in them that they will pay us back? Or they'll share other factors like what you all are sharing that boil down to that. And in the financial world, that's what we call risk. How risky is this person? How much of a risk are they? Am I going to likely lose my money with them? Or am I going to get it back and have interest? Are they going to pay back responsibly? So this is the range of the scores, from on the lowest side 300 to on the high side 850. Again, the 3 credit bureaus that manage and share this information with our banks and credit unions as needed. And this is the number that summarizes that credit history, and that's an indication at a glance of how trustworthy or low or high risk we are when it comes to borrowing money. Now, this number will make a huge difference in housing for us. It'll make us eligible or not for an apartment, for a rental, for a home loan. And that's why it's very important to talk to young folks about utilizing a credit card in a constructive way. Oftentimes it comes up when I went to college, there were banks all over encouraging me to get a credit card, and they were giving out free bags and sweaters and all this stuff just for opening up a credit card, but I had no idea what I was doing. So what I recommend to youth is to understand how to utilize it to your benefit and to have a budget, understand the differences between needs and wants. That sounds super simple, but it's not as simple as it seems. Differentiate between needs and wants again before we get a credit card so that we can use it to our advantage. And so what I say is use it before you need it, and use it as if you didn't need it. Use it for the stuff you would have purchased anyway. Again, differentiating between needs and wants. When we use a credit card for just our needs, let's say gas, groceries, utilities, and we have the funds in our checking account to pay that down, that helps us improve our credit score. So here's some additional tips for that. My slide would advance. The way a credit card works is it's the ability to borrow money, and you'll get the statement for it usually towards the end of the month, or your statement period. And most folks will say, well, I'll just pay what they asked me to and not the whole amount. When you do that, the remaining amount rolls over, so to speak, to the next month. Not only do you have to pay that down, but you also pay it with interest. When we're first starting off with a credit card, that interest can be on the high side, from 20 to 30%, like we talked about. We don't want to pay that much. So the better we can use it initially, the more likely we are to, one, increase that max available that we have to spend, and decrease the interest that we're having to pay on it. So especially to start off, but you can do this at any time, we recommend staying under 30% of your available limit. If you're me, like 18 years old, let's say 19 years old, and you have a credit card and your available limit or your max is 1,000, I'd be thinking I can spend $999.99 and be fine. Not the case, right? That's what I would have thought. So no judgment if you would have thought the same, but staying under 30% is like the best thing I can liken to is you let your coworker borrow that $100 and they say, I just spent 30 of it, but here you go. Here's what I spent back, paying it back. And you say, okay, cool. I trusted them with 100, but they spent even less of that. So they're using it responsibly. That's the best example that I could think of to make it relatable to young folks. So we try to stay under 30% of that available limit. In this case, if it's 1,000, I try to spend 300 or less, and that actively helps to improve my credit score. When I get the bill, I want to pay the entire thing. Let's say I spent $250. I'm going to pay that $250 back because the statement will say you only have to pay back $100, $50, whatever it is. And we go, oh, great. Without realizing we can actively improve our credit score by actually paying that all down and paying it in full. The next one, generally, the next one is wait 6 or more months between applications. And that is because you want to have some credit history that will help with your next application. So if I apply to 3 cards at once, I'm going to get the same terms and conditions probably for all 3. Whereas if I have 1 card and I wait a year, at that point, I'll have a history. I'll ideally have a history that says that I used that card well, paid it all down every time, didn't go over my limit, and therefore the terms of my next card could be better. Maybe I have a little bit higher limit and lower interest. So that's why we recommend waiting in between, and generally recommend 2 to 3 cards is beneficial that you're actively using, but it's not necessary to have a ton more in order to increase your credit score. Keeping no annual fees open. The longer you have a credit card open, the better, because history, as long as you're using it well, that length of the history is going to positively impact your credit score. And here's a summary of the different elements. So how long you've had something, the capacity or utilization, meaning that coincidentally, that number is also 30, but meaning that you're within that 30% of your available limit. And mix of credit types can be like a federal loan, a home loan, car loan, etc. But it's just 10%, so we don't need to worry about having a ton of different types of loans just yet. Mostly it's those recommendations that are really going to help in these 2 top areas of it: paying on time and in full, and making sure that our debt to income ratio stays reasonable for us. And here's a visual of that. Again, here are the 3 credit bureaus that report this information, and a reminder that you can get 1 free credit report and 1 free credit score pulled annually with these, along with utilizing any tools that you have with your bank or credit union. At Excite, for example, we call it Savvy Money. It's a tool called Savvy Money where you can consistently look at your credit score. Again, how impacts, including renting, including employment. Employers can also take a look at your credit score, not because they're looking to see, do you have a lot of money in the bank, but they're looking to see it as a reflection of your level of responsibility and trustworthiness. Now, a secured card is a possibility, especially for folks who are just starting off, especially for young folks who have not had a credit card before. It basically means that you put down a down payment on a card. You have money set aside that is basically the security against your use of the credit card. So whereas if I have a home loan, the collateral is the house. If I don't pay that loan back, my house could be taken. Same with a car. We call that repo or repossession. You don't typically have that with a credit card. So to start off, you may have a secured card where you do put down a deposit, generally a minimum of $300 to $500, but it could be more. So let's say I wanted to make sure I could spend at least $300 on my card. I may want to put down $1,000 so that I can stay in that 30% and spend up to $300, maybe use that as a gas card. Unsecured is your regular credit card. And here are some questions to consider when browsing for credit cards. Also important to take a look. A lot of folks will use a card almost randomly. They'll pick one and they end up banking with a bank that's unfamiliar to them, or maybe it's an online bank. I do recommend taking a look at the bank or credit union where you already have an account, or for the young folks you're working with, they don't have an account, to shop around to see what benefits a bank or credit union can have for them. And then to take a look there first for their credit cards, because again, we want to see this as a long-term relationship that can help us out. And now briefly to saving, I like to approach it in this way, as a habit and as a mindset. Because it can be so intimidating for people, especially when folks will commonly say, I don't make enough to save. And unfortunately, it is the case. And I respect the fact that oftentimes we're living check to check and can only pay the rent and food and transportation. But as we develop this mindset where we can set aside funds, the more likely we'll be to do so when we do have a greater income. So it's really not about the dollar amount per se, but about developing that habit and the mindset of planning for the future, which I know I did not have when I was younger. I knew about college and I thought about going to college because my parents said that's how you're going to get ahead farther than we did. But I certainly did not know about saving. So budgeting and saving, I like to think of this way. We're changing our mindset from where did my money go? Like looking at your wallet, going what happened to it, looking at your bank account, to this is where my money will go. And that's really what budgeting comes down to, is designating and knowing ahead of time where your money is going to go. And so key steps to doing that, and here's some statistics, I think I actually covered these earlier, is knowing how much is coming in, including resources like, let's say, a food bank that you utilize, because we want to be able to be self-sustaining in the long run where we can afford those things. So we want to know how much essentially life is costing us. I also like to make the point here, though, that if you can use resources, especially for college students who use their basic needs center or El Centro, or any other resource centers, that I love that nowadays colleges have food pantries on campus, whereas 5, 10, 20 years ago, that was not necessarily the case. What I tell folks is, for myself, for example, I think that I felt maybe some pride where I could have used these resources in college and didn't, but also I had this sense of someone else needs it more than I do. I don't want to take away a resource that someone else who needs it more could use. And so now as an adult, I look at Santa Clara County and I think, nope, there's plenty of resources. There's plenty to go around. It's just whether or not the distribution of them is equitable. That's my perspective. And I say that to encourage folks to use the resources that they have without any shame or embarrassment about it, so that they can save or that they can get by. And then how much is going out? And I know we're close to time, so I'm gonna wrap up here. These are just some example categories that make it a little bit more manageable. At least for myself, I know I can get overwhelmed to think of all the places that we spend money. The simple practice of writing down all the ways that we spend really can help us hone in. For me, everyone always guesses it, so I won't have you guess in the chat, but there was one thing that I was spending way too much money on in college. And it wasn't until I sat down and actually looked at my spending that I realized it was hundreds of dollars a month. And that was coffee. Yes, coffee. Of course, it had to be coffee, which I've since given up for health reasons, unfortunately. But when we categorize things and look at things as they relate to us, as they're important to us, it can make it easier to think through, what is my priority? Where can I adjust? So I highly recommend saving your receipts for a week, then a month. A year, even for me, is too long, but I can take a look at my bank account and see where I'm spending and see the categories they put them in. So I understand where I'm saving. Only then can we really then choose to make a difference. So for example, when you do that, you'll notice that eating out costs on average 3 times more than eating in, at least 3 times more. And there's a myth of fast food being cheap and healthier food being more expensive, when that's not necessarily the case. When we make a meal at home, it can be way less expensive and last longer and be healthier for us in the long term than eating out. And then I'll end with this point here about calculating expenses. So oftentimes it's those small expenses like the coffee that really add up. You'll see here we added up over 20 years, and I've had people say, this doesn't even incorporate the fact that that price is going to go up over 20 years. So imagine even more for a habit that I do over 20 years of having coffee 4 times a week. I'm going to spend at least the value of a new car, 50, maybe not a new car, but a used car, some less expensive new car, $15,000 on coffee. I've had people calculate it for how much they spend on their nails and say, oh my God, it's a car. You'll see eating out. These are real examples that people have shared in these workshops. That's a down payment on a house, or a house in like Sacramento or other areas. So the same is true at the reverse. If we're saving at these small increments, it will add up over time. It's just a matter of keeping that motivation for the long term. So I'll make sure this presentation gets out to you, because there are these other strategies that are basically indicate to us when we know where our money is going, we allot it in advance. We know it's this much for housing, this much for wants versus needs. And then we can see, even if it's $20, okay, I have $20 that I can put in my savings, and it's really that habit that's going to make a difference for us. This is a good point of comparison here, some slight adjustments that we can make. So it's not about saying no to everything. It might be an adjustment like, I'm drinking coffee out only on Fridays, or I'm going out to eat only on the weekends, right? Adjustments that are more reasonable for us to make. But really getting back to a place where we have control over these things. And I'll just leave it at that. Well, one last point I'll make is we do in our workshops also talk about our relationship to money. And one question we ask is, are your money habits reflective of your values? And I've had adults say to me, I've never thought of that. So again, it's not about right or wrong. It's not do this, do that. I'm not going to come in and tell you, what's right or wrong for you. It's really about aligning to your values and what folks desire in their life, and seeing if our money habits and our relationship to money is healthy for however we define it, and appropriate for us, for what we want in the long term and for our values. So we're totally out of time. I could keep going, but really want to say thank you before we close for being here and for your work with young folks in our community.
And thank you for your work with our community, and a fantastic presentation. And if anyone's thinking, oh, I wish my students or families could hear that directly and me not have to translate it, great news. Dora's coming back next Tuesday at, I believe it's 4 o'clock for a session for students and families. So encourage you to check that out. Now, Dora, it looks like we have time for one question, and this came from the audience before we close out. And if you have any other questions, folks, drop them into the Padlet, and Dora will still have access to them, and we can follow up with you after this session. That question is about credit cards. What are your go-to recommendations for credit cards, specifically for travel cards, if you have any? And how long should we wait between applying for credit cards?
My one recommendation is to take a look at what your bank or credit union offer to begin with. So while technically the way that you manage your savings and checkings accounts doesn't technically impact your credit score, it can give us in the financial system a larger picture of where you're at. I'll give you an example. My CASA teen, actually, when I was a court-appointed special advocate and I had a foster youth who I mentored, applied. She coincidentally had Excite Credit Union before I ever thought I would join the team, because she was a foster youth. And she applied for a secured card just this last year. And they actually gave her a call and said, because you've been with us a few years and we see that you're doing well financially, we're going to qualify you for a regular card. So no need to put a down payment. And it's just an example of how that relationship can mean greater capacity, even if we don't have that on paper, even if technically her credit score she was non-existent, she doesn't have any credit history, but by seeing her history at her financial institution, Excite Credit Union did qualify her for a regular card. So that's why I recommend go with your existing financial institution to strengthen that relationship, see what they have available. And as far as in between cards, at least 6 months. See where you're at as far as what you would qualify for, because ideally we want to show some credit history and treat and manage our credit card well so that our credit score will go up actively, and so that the next card will have lower interest rate and higher maximum. So eventually we can use it for the new fridge we need, or something bigger. And that's why I say it's not for shopping spree, it's not extra money, but it's to increase our capacity in the future. So when we have a greater score, more likely to get a mortgage in the future, etc. And this may seem far off for the young folks we're working with, but I remind people, we still see huge disparities between who's a homeowner and not, and less people of color who are homeowners. And that change for the future starts yesterday. And it's in our young folks. So that's why I plant that seed of, don't think that it's impossible for you to be a homeowner, but know that these are the tools you can utilize to your benefit now, a credit card being one of them when they are ready.
Thank you so much for that, Dora. Really appreciate you answering our questions and spending time with us today. I'm going to go ahead and pass it back to our Zoom master, but really appreciate you spending this time walking us through banking and budgeting. Thank you.
Once again, thank you to our speaker, Dora Breyer, for presenting on financial and banking literacy with Excite Credit Union.
We want to thank all of our incredible presenters from across 10 partners who shared their gifts of time, talent, and treasure with us over the last 4 weeks, from February 23 through March 16, 2023. Whether you attended one session or more, please complete our exit ticket and let us know how we can enhance these sessions and this series for future years. Thank you to our generous partners for providing our wonderful gifts for our series raffle. You can win one of 5 prizes, like a backpack filled with goodies from our steering committee member, MoneyThink, a $100 athletic gift card, or a Gap Bank swag bag. Don't forget to check out the rest of this YouTube playlist for more great content from our partners. Thank you again to our 10 partners from across the state of California: the University of California, the California State University, the California Community Colleges, the California Student Aid Commission, ScholarShare 529 and CalKids, AICCU, or the Association for Independent California Colleges and Universities, the California Association of Student Financial Aid Administrators, and Decided, powered by MoneyThink. We also want to give special thanks to our connector sponsor, the College Futures Foundation, and to all of our generous sponsors. This free 4-week webinar series is brought to you by the Northern California College Promise Coalition, our members, our sponsors, our partners, and more. We invite you to share this series with your colleagues, students, and families across California. Thank you so much for sharing your time with us.